All right, today we're going to do a kind of checkup on one of the world's biggest financial institutions, JPMorgan Chase. And our main tool isn't some high-tech medical scanner. It's one of the most revealing documents the company is legally forced to publish every single year.
So that brings up a really big question, right? When you have a company with $4 trillion in assets, that's bigger than the entire economy of most countries, how do you even begin to take its pulse? How can you possibly understand its health, its risks, and what really makes it tick?
Well, the answer lies in this document called the Form 10-K. The easiest way to think about it is as the company's official, legally mandated annual health report. For our purposes, it's basically the MRI scan that's going to let us see deep inside this financial giant. So, let's get started.
Okay, first up, let's look at the bank's skeleton. And by that, I mean its sheer size and the foundational structure that holds everything else up. And believe me, the scale here is, well, it's just staggering. First, just consider the market value of its stock as of mid-2024. We're talking over $500 billion. Then you have the people. The bank employs over 317,000 of them around the globe. That's a workforce larger than the entire population of many major cities. And here's the headline number: $4 trillion in total assets. This figure, all by itself, explains why an institution like this is considered systemically important to the entire global economy.
And that massive workforce is truly global. I mean, sure, the majority of employees are based in North America, but look at this. Nearly 94,000 are in the Asia-Pacific region. That's a huge number, and it's a very clear signal of the bank's international strategy.
So what holds all of this together? At its very core, JPMorgan Chase is what's called a holding company. Now, that just means the main corporation doesn't do the banking itself. Instead, it owns the companies that do, like its main subsidiary, JPMorgan Chase Bank. This is the simple foundational skeleton for all of its massive operations.
So with the skeleton in place, let's dig into the bank's nervous system. This is the incredibly complex web of external signals coming from regulators and all the internal alarms for risk that govern its every move.
Those external signals come from a whole alphabet soup of regulators. In the US alone, you've got the Fed, the FDIC, which insures our deposits, and the SEC, which oversees the markets. And since it's a global bank, it also has to answer to international bodies, like the PRA in the UK. Each one is constantly sending out signals and rules that the bank has to obey.
And then there are the internal alarms. You can think of these as the bank's pain receptors. There's market risk from something like changing interest rates, and of course, credit risk. That's the chance that billions in loans just won't get paid back. Add to that the constant threat of operational failures, cyber attacks, and political instability, and you start to see what a high-stakes balancing act this is, 24/7.
And you can see the tension in that nervous system right here. This is a direct quote from the 10K, and it's basically admitting that the bank, often through these industry trade groups, is actively fighting new regulations, like a recent rule on overdraft fees. It's a perfect example of that constant push and pull between the regulators and the regulator.
Now we get to the heart of the matter, the flow of money. We're going to look at the bank's main business segments, which really do function like vital organs, each with a very specific job, all working to pump the lifeblood of money through the global financial system.
So, where does the bank put most of its people? Well, look at this. Almost half of all its employees work in just one area: consumer and community banking. This is the part of the bank most of us actually know: the branches, the credit cards, the mortgages. It's by far the largest organ in this financial body.
These different lines of business, or LOBs as the bank calls them, are really the functional units that drive the entire company. You can think of consumer banking, the investment bank, and asset management as different organs, all performing their own specific but very interconnected jobs.
And just to make that biggest segment feel a little more real, just look at these numbers. Nearly 58 million active mobile customers, almost 5,000 physical branches, and get this, an incredible $1.8 trillion in annual card sales. This is where the bank directly touches the daily lives of millions and millions of people.
So, after our deep dive into the 10K, what's the final diagnosis? What has this detailed scan actually shown us about the health and the almost unbelievable complexity of this financial behemoth?
Well, on the one hand, the 10K gives us this crystal clear picture of the bank's scale, its risks, and its economic importance. But on the other hand, it has clear limits. I mean, the document itself admits that its models are based on historical data that may not persist. It's a fantastic, detailed snapshot of the past, but it is definitely not a crystal ball for the future.
And that leaves us with a final and pretty crucial question.
After seeing the sheer scale, the global interconnectedness, and the trillions of dollars flowing through this single entity, what does that concept of too big to fail really mean in today's world?